Welcome into a daily editorial here on the KE Report. I am chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. And Jordan, let's start off with silver. We have talked about silver a couple weeks ago, but silver is really starting to move to the upside. Today is another double-digit percentage-wise gain for silver, and silver is closing in on about that $16 level. Still has some work to do. The high for this year was $16.20. What do you think, though, about this recent action in silver outperforming gold?
Well, Corey, I see. Looking at the chart of gold, I see gold right now is threatening to close above 1420 as we're speaking. It's just under 1424, and that's something I've been saying over the last several weeks. Is if we get a close in gold above 1420, which is a very key level, that's probably when you're going to start to see silver outperform. Now, silver started to outperform really 2 or 3 days ago. I think part of the reason, aside from the fact that the gold-silver ratio looks like it peaked a couple days ago, and silver has been extremely undervalued, extremely cheap relative to gold on a historical basis. But more importantly, even though yields are down today, the potential for a rebound in yields is more favorable for silver than gold. And let me explain why. Because what we've seen in the last several months with precious metals is this has been an economic weakness, Fed cutting rates type of move. It has not been a rebound in inflation expectations or a reflation type of move. However, if we do start to see yields rebound a little bit, generally that's going to favor silver more than gold. The key for precious metals is the yield curve steepens, and what that implies is yields are rebounding, but the long-term yields are rising faster than short-term yields. And that's something I think it's at some point we could see. It's very possible to me. And, in that environment, we could see the 2-year and short-term yields, maybe they don't rise, but maybe they stabilize, maybe they rise a little bit. Whereas maybe you see the 10-year and the 30-year yield, rise a little bit more than short-term yield. So that's when you get a steepening yield curve. That happens when you tend to have the threat of recession coming, or you have a rise in inflation expectations. I think this time around it could be more towards inflation expectations, which would benefit silver. So I'm sorry for the long explanation, but I think those are the reasons why there's several reasons, but that really explains why we're starting to see silver move. And, Corey, at the beginning of this month, I noticed I really liked the monthly chart of silver. Silver had a very strong rise last month, and that was after forming a bit of a bullish hammer the previous month. So it looks like, we still have less than a couple weeks to go, but it looks like on the monthly chart, silver is going to get another strong month. If silver were to close above 16 on the monthly chart, that would be really, really positive, because that's the next key level. If silver can close above 16, then it doesn't really have much resistance until the low to mid 18s.
Okay, so encouraging there, and I also find it interesting that you also are on the at least train that thinking that inflation expectations might pick up. The Fed and other central banks want inflation to pick up, and you know what? It sounds like they're going to be cutting rates and trying to do what they can to get inflation up, but it hasn't led to inflation in the past. Who knows? Maybe this time will be different. What other correlated markets are you going to be looking at, though, to get a feeling for if inflation is actually picking up? Or is it simply just, again, watching the precious metals and understanding that just inflation expectations can drive them higher?
Yeah, the key to watch is the yield curve, and if it steepens, then watch how precious metals perform. And in the last week or two, we've started to see yields rise a little bit, and we've seen I think there was a strong retail sales report. Of course, we had the jobs number a couple weeks ago. The headline number was fairly strong. So recent reports in the last couple weeks, they haven't shown like that much of a fall off in economic data. And so we don't necessarily have to get surging inflation to have rising inflation expectations. It's really just the direction, because inflation expectations have been going down, they've been stable. And so if they just start rising for a couple months and that's sustained, they don't have to be rising for by huge amounts. If they just continue to rise month by month, just bit by bit, that could be enough for the market's eyes to think that we're seeing a change in inflation expectations, the yield curve steepening. We need to be in inflation sensitive investments. Another thing to watch, Corey, is definitely the dollar, and this is really interesting because the dollar, up until 2 or 3 days ago, I would say this chart looks really bearish and the dollar's in trouble if it breaks below the June low. That is still the case, but if we're looking at the daily chart, the dollar's down back below 97 today, but in the low 97s, there's 3 tops since the beginning of June. So it'll be interesting to see if the dollar can break above that or not. If it doesn't break above that level and it heads back lower, then there's a threat that it could break the recent low in the mid 95s. And so if the dollar breaks that low, you're going to see a move down to the low 90s. So that's additional fuel for precious metals, and especially silver and silver relative to gold. So I'm not predicting that's going to happen because we can't see the future. We don't know, but it's just something to keep in mind. Keep an eye on the dollar, because if that rolls over more and breaks that mid 95 level, that's going to add even more fuel to precious metals. And look, Corey, if the dollar does the opposite thing and it breaks these highs of the last couple months and rallies back to the highs at 98, the White House is not going to be happy with that, and they're going to want more and more easing. So with respect to the dollar, I think precious metals are in a good situation here. Of course, we'd rather see it break that support, but in the event that the dollar trades towards its highs again, that's just going to induce more easing, more soft policy. So precious metals are kind of in a good position here relative to the dollar.
Yeah, they really are. And a lot is going in the favor of the precious metals. And one thing to remember about this inflation expectation, some of the recent inflation data from just last week came in right around that 2% level, even above that 2% level, which it has consistently been doing. So kind of noteworthy to see that the central banks still want higher inflation, even when at least some of the data in the U.S. is right around the Fed's target. So let's talk about a general trading strategy then for people who, let's say, maybe miss this first move in gold or silver, especially for gold, let's say, because if you manage to buy gold at even the lowest point in simply this year, in about April, late April, down at, let's say, 1270 about, and you've already missed about an 11% move. How would you recommend people trading this gold market after this breakout? And now it seems like more of a confirmation of this breakout.
Yeah, Corey, it's a great question. There's a couple of things here that I'd say. First of all, focus on the companies, because a lot of times, and this is an issue that I got into and made mistakes a couple of years ago, is sometimes if you get so obsessed with how the market is trending and every little move, you can take your eye off the ball as far as picking the right companies and doing fundamental analysis. So I would, first of all, you want to look at the companies you like, that you want to buy, and you don't necessarily want to just buy the weakest ones and avoid the strongest ones, because the ones that are strong, they can continue to trend quite a bit. So if there's something you really want to buy and it's been really strong and hasn't corrected much, it's okay to buy that. But for example, you'd probably want to buy a fraction of what you normally buy, and so that limits your risk. And then whenever that thing goes sideways for a little while or corrects a little bit, then you can buy more and get a full position. Now, you can buy a full position in the things that haven't done as well, but you're confident that they're going to start to get more buying during this particular move. I would also look at, now you probably want to skew, not necessarily skew your investing and your trading in terms of silver right now, but there are going to be probably a few more opportunities in smaller silver stocks that haven't quite moved yet or are starting to move. So that's something to consider. Or, finally, the last thing, just you can look for gold names that, maybe they haven't moved yet, or something has happened that's caused them to correct. And, maybe it doesn't revolve around the company's fundamentals. I'm looking at something, for example, they made a discovery, it completely changed the trajectory of the company. the stock had made a huge move, but it recently corrected about 40%. I think it's stabilizing again now. So that's something that, I'm going to be buying because it's just corrected about 40%. It's still in an uptrend. So that's just an example of the thing, the things that you can do to get yourself a lot more exposure here to take advantage of what we expect to be more strength over the next week or two.
So still all about picking the good companies too and balancing out some of the ones that have run and even were running before this breakout and understanding that you don't need to take all full positions right away. Jordan, do you find yourself a little more attracted to some of these producers though, now that we do have higher and what seem like stably higher prices? These producers can generate much nicer cash flow numbers then.
Yeah, I mean, it really depends. It depends on which producers. There's a couple that I really, really like, and then there's some that I just don't like as much. Corey, I favor the companies that are already economic producers. I know that they're not going to benefit as much from this kind of move, but there's still a lot to be said here as far as, is this the start of a multi-year bull market, or is this just going to be a strong move for 6, 9, or 12 months? So I'm a little cautious about kind of looking at producers that are more optionality plays. I still like kind of the lower and medium cost producers, and it really, the sweet spot, Corey, is producers that have the ability to grow production, whether it's from exploration, or they already have the mines in their pipeline and they have the capital to be able to grow production in the next year or two. That's really what you want to look for, because then you get you get the real double effect. Number one, you get the rising margins from the rising gold price, and then secondly, that's compounded by the fact that they're increasing production. So that's really what you want to look at. That's what I'm looking at. I'm not quite focused on the more optionality side. I would be, careful about picking those producers that have struggled and have had some issues, because if they have operating problems and everything is not running smoothly, even though the gold price may rise another 100 or $200 an ounce, if the company doesn't have everything in its order and it's not operating well, they can still have issues and they may not benefit from that rise in the gold price.
Yeah, very true. All right, here to wrap us up, though, Jordan, it's been now about a month, almost to the day, of when gold started to break out above that about 1370, 1380 level. And for the most part, it's moved sideways in a volatile sense. Highs in about 1442, lows down just below 1400. The longer this moves sideways, does that lessen the impact or potential of any sort of a sell-off coming?
No, definitely not. I mean, it looks like we already see miners, they're making higher highs here. Silver, of course, is making higher highs. So the strength in the miners was in the last week, just the relative strength is really telling you that this market was going to make a move higher. Now today, if gold is able to close about 1420, that would be significant. So I'm not worried about, at least at this point, it doesn't look like we're going to get a move back down to 1370. I mean, it's just one thought, but maybe when gold, maybe it closes above 1420 and runs up to 1500 or 1525. Maybe it could pull back to 1420 again. I mean, that's a potential pullback in the next couple months, but. I don't, as far as like gold going back down to 1370, I don't see it at this point. I think that at least in the days ahead, I mean, it looks to me like higher prices are more likely than lower prices.
Yeah, Jordan, I agree with you. This has been a very encouraging move, and even with the stocks following along and now silver following along, it is very encouraging again, and the dollar still holding up there, but hey, if that breaks down, that could be another driver, the whole yield curve, a lot right now that still could continue to drive these precious metals higher. Jordan, great chatting with you. Thanks for sharing some of your updates on gold and silver.